Okay, let's go over the setup here, guys and gals. The last setup that we saw live in the trading room, you saw this happen live in the room. When the signal came up, show you what we look for. Okay, we have market profile that works on your own ninja charts. On market profile works on your own ninja charts. The red is the high value area. The green is the low value area. What also works on JaySignal are these moving averages. Okay, these moving averages, okay, are used for trend as our trend filter. We do not trade, we do not counter trend trade the markets unless market profile is broken back inside of. In other words, if the moving averages are down, we're only taking JaySignal shorts. If you look at all the JaySignal shorts since midnight tonight, last night, we've had 1, 2, 3, 4 opportunities to go short. 4 opportunities to go short using JaySignal. 1, 2, 3, 4 off my 5 Simrenko. The breaking point in the market is when it gets outside of HVA. The market gets really strong. Look for an ABC long. Or if you get outside below LVA, the market gets really weak. Look for an ABC short. This is strong. That's why this market profile works in all futures market right across the board. Doesn't matter what market you trade. It's a strong market. If it breaks below my market profile, the market is weak. A lot of traders just use yesterday's market profile. That's a no-no. You're going to get stopped out 50% of the time typically. You got to have a dynamic profile like this to make it work intraday trader. We are day traders. We're not position traders. We don't care about yesterday's profiles. Sometimes they work, sometimes they don't. I don't know why traders insist on trading yesterday's profile as a control point. It's hit or miss. You can only trade what the market's showing the footprint. These green and red lines show us the footprint of the market. It tells us exactly where to buy and sell and when the market's going to break down or break out. So as you can see, we held LVA all morning. We finally got below this morning, LVA for the market to get weak. If it ever get above HVA, that'd be strong. We look for the opposite, ABC long. So what happened was we got below low value area. Here it is. Market got really weak right here. We don't just sell when moving averages cross over. That's for the novice trader. When the MAC crosses over, or we're seeing divergence and all kinds of crazy lagging indicators. That's for the novice trader. Let them consistently be wrong. We're smarter than that. We know we can only sell retracements with trend. My 5-minute trend filter that goes over top my proprietary Renko bar and JaySignal that you get on your own ninja charts shows we're in a downtrend. There's my first Fibonacci dots that tell me the area to go short. I know I broke LVA, so I'm looking for the first ABC short. There's my beautiful, gorgeous fib dot that popped up. We saw this live in the room that happened this morning. There's my beautiful fib dot that popped up at 52.55. There's my gorgeous, beautiful arrow that shows we're in a possible Elliott wave short, possible wave 3 down or wave 5 down. Then we wait for the triangle that shows that's an imbalance of orders. An imbalance of orders tells us that the market is now, they're trying to mark the market down, enter at this bar, right to the exact bar. I now have my entry. I now know my stop is a black line. If it closes a body candle close, 2/3 body candle close above, wicks don't count, I stop myself out. Always have a catastrophic stop in to make sure that you have a catastrophic stop in if the market moves fast. But manually, I'd stop myself out if I close 2/3 body candle close above. It does not. A lot of times, JaySignal, you take no heat on it, and she goes straight with you, straight down. All right, so that's a nice $450 move down, straight down per one contract. Based upon breaking LVA, retesting LVA, JaySignal short. This is all my largest time frame. I have 2 time frames I trade off of. My long time frame, which I don't get a lot of signals. I only got, since midnight, 1, 2, 3, 4 signals. Now 5 retracement signals. Really good time frame to trade in trend days. Remember, the market's going to trend typically 3 days in this market environment in crude oil. So we're getting these, if you log in, this magenta moving average is angled down, you're going to have a hell of a morning selling retracements. If it's angled straight up, 45-degree angle up, you're going to have a hell of a morning buying retracements. The market really likes to follow through with my JaySignals on trend days. On chop days, we know how to trade that also. I'll show you how to do that in a bit. Equally as impressive. But as you can tell, Look at my retracements. 1, 2, 3, 4, 5. It's called every single retracement now, just with my fib dots alone. Just my fib dots alone, even without my Elliott wave, even without my order imbalance indicator to enter the trade. Even without it, has called the move. But what I want you to do is get on this. When you break LVA, retest LVA, this is the biggest sweet spot to buy and sell in all markets. I don't care if you trade the S&P 500, S&P 400, Russell 2000. I don't care if you trade the Dow Minis. I don't care if you trade copper. I don't care if you trade the euro. That's your sweetest spot right there. Break LVA, retest LVA short. That's where I want you to get short the market. That's the sweetest spot to get short off my longest time frame. Now, if I go my shortest time frame, which is my 3 Simrinko, let's take a look at that. The only time now, my largest time frame, my 5 Sim, shows all deep retracements. Doesn't come up a lot. My shallow time frame, you can only trade at LVA, no matter what. You don't trade any of these signals down here. You block those out. You can't even trade those. You're not allowed to trade those because you're trading a shallow retracement time frame. You can't trade those. You can only trade the first break of LVA retest with the signal. And it called the exact high to the exact bar. And that was a $1,700 move in crude oil. Maximum risk 130 to 150 bucks. You don't risk more than 150 on the 3 Sim. $1,700 move. Maximum $150 loss. Just on my 3 Simrinko playing off market profile. So if I'm trading the 3 Simrinko, which is my shallow retracement indicator, I only trade with the break of market profile and a retest with JaySignal as an entry. So my methodology is this. Let market profile set the trade up. Let JaySignal trigger for the entry. The stop's a black line. You scale out with the symmetry dots. The 5, no, Thomas, you can either trade off the 5 and the 3. A lot of traders only trade off the 5 Sim by itself. Because the 3 Sim, you're not allowed to trade unless you break through LVA or HVA off of JaySignal. You have to break market profile or you're not allowed to trade it. The 3 Sim is a lower probability chart because it's a smaller time frame, right? And you get a ton of retracements. Now look, I only got 4 retracements on my large time frame, right? This will explain it to you. Watch. This makes sense. My large time frame, I've only had 4 retracements. Look on the way up here. Now watch. Here's how we do it. Let me show you the last couple of days. Look how cool JaySignal is. Man, it's unbelievable how I got this thing set up. Here's the big entry that we got short yesterday on the 17th. Look at this trade setup. You broke down, retested, broke market profile. Look at my exact entry short. It went down 100 ticks, 100 plus ticks. 80 all the way down. It went down 180 ticks, I'm sorry. $1,800 move. All the way down. Didn't even break my black line. JaySignal got the first one. Then we get back inside a market profile. There's my first JaySignal long. Went up 100 plus ticks. There's almost a $3,000 move per one contract with $150 risk on both sides. So you had a $300 risk on both sides with a $3,000 potential to make profit. Look how it showed my black line. And that's the same exact setup it did. Now watch. Look how my black line was short bias all the way down and long bias all the way up. Now look since yesterday since 219. My long time frame's been short bias all the way down. All the way down. All those novice traders are trying to buy these lows. Buy the low, buy the low, buy the low. Good luck. You're going to get taken to the woodshed. So what you do, Thomas, is you try to get the first retracement after breaking market profile. Here, it broke market profile. There's your first retracement. Here, it broke market profile, first retracement. Here, broke market profile, first retracement. Here, they had live this morning, market profile, first retracement. Does that make sense? And then look at the signals you get. Because you don't get a lot of them. Yesterday I got 1, 2, 3, 4. 4 signals on the way up. On the way down, 1, 2, 3. Look at this. It's getting all these big retracements on a long time frame. Now, if I put up, so let's say my long time frame caught 1, 2, 3, 4, 5 retracements, right? Now, on my short time frame, you don't want to do that, right? With my short time frame, check it out. It's still since midnight. Look at all the retracements, a lot of trend changes, right? So there's a lot of trend changes. You don't want to do it until it does this. You don't want to trade this junk in here because it's a shallow retracement, right? You don't want to trade all this junk. Don't trade any of this. Don't trade any of this, right? Off the 3-sim Renko. The 5-sim, you can trade it with trend, but you don't trade any 3-sim. What you do with the 3-sim Renko is just trade it when you get outside of market profile. See how it breaks outside and gets away from market profile? Then that's your entry when it breaks down through it and comes back up through it for a short. Does that make sense, guys? On the 3-sim, you totally trade it different because the shallow retracement indicator, you can only trade it on break-in LVA or HVA. The 5-sim, you can take all the retracement shorts. The first one is the best. Does that make sense? Give me a Y, guys and gals. Make sense trading the 3 versus the 5? Everybody on the same page? You guys understand it? So it really helps you out in distinguishing when you trade the 3 versus the 5. Because you don't trade this. You don't trade this. You already got your signal up here, breaking LVA, retest.